All right, yo, what's up, people? So we are just recording right now. I'm going to be going over yesterday's trading and today's trading. So let's go over it. So yesterday's trading was kind of weird because we never took out these highs or these highs right here. We just we didn't like take them out. We just used it as kind of like a rejection block, and then that happened again here. We never really took them out, but I mean we took out this high, this high, this high, and this was going into the morning session, so I'm going to zoom in here because this is what I was kind of waking up and seeing. And then before I really got on the charts or wanted to take a trade, I thought this was a nice inverse when price inverse this right here. Um, just because of you can see the displacement up, you can see the volume on the way up, and we quickly get that retracement. We don't really get much time to play around, and in this we tap into this inverse fair value gap right here, never closing above it. So we have something we're delivering from, and then we come back down. I'm not going to check on ES if there's SMT because it'll just ruin where I'm at on the page. But there could have been some SMT with either ES or YM to further indicate more conviction in the trade. The only thing with this is we technically took out this low before this candle closed, so it would be invalid for Dodge's model. Price just kind of went down and didn't really give us any model because if I'm going to take some shorts, I think we had some equal lows kind of. Well, okay, yeah. I was aiming short, so if I was to take shorts, I would need to see bullish fair value gaps, but there weren't any really good ones. Well, there's one here, so this was a good one. Um, could have found an entry right there. And this is during a macro, as you can see, a 950 to 1010 macro. So that is a good trade, and the reason why it's a good trade is because we are delivering from this fair value gap right here, and your price is already bearish. So when we're at this point, I mean, it's pretty obvious that it's going to go a little bit lower. And then when you inverse this fair value gap and then come back into it, it just gives you further conviction that price is going to go lower. Um, so the first trade, I didn't really trade any of this on Tuesday because I was just at the gym lifting. I had practice. I saw this one, and I actually think I took this one. So price closed above here. So we create this fair value gap on the way down that takes out this low right here, and then we inverse this fair value gap, and then we do not get this high, which is kind of what we were doing. I showed you on the higher scale range, is that price wasn't taking out highs today. It was just kind of wicking them. But price comes back down into it, and then it fails. So that one failed, and I've just been noticing this week a lot of these inverse fair value gaps have not really been, price hasn't really been too clean. I mean, it takes being in the right mind, sitting at the desk, calm and ready to trade to be able to trade these. But the thing why I've been taking so many losses lately is I've been trying to trade on my phone, at the gym, in my car, after practice. I mean, I need to be in a right mindset. I need to be in a mindset because the only thing I control about trading, the only thing you can control is the mind you bring to the moment of a challenge. Other than that, you're not really, there's nothing else to control. It's you're controlling your probabilities. So if I'm trading in my car kind of tired or a little bit faded or doing something I really shouldn't be for trading, and it's lowering my probability, and if it's lowering my probability, I won't be as successful. And my whole motto is pursuing potential, and if you have this potential, you have to chase it. So from now, I'm only going to be taking trades where I'm completely focused and on the charts in a clear mindset. And another thing is that I was on a psychology lecture, and he said, the guy speaking said, if you're thinking of trading as your business, then every trade technically is a business decision. And you know what else is a business decision? Not taking a trade. So when you're not taking a trade, you're making a business decision for yourself because you're not applying that risk to yourself, to your company. So that is a business decision. So You have to be smart with your actions because every single action you make is a business decision. And if you want to make, I don't know about you, but most people don't make business decision, bro, business decisions while they're in the gym or tired or on their phone just after waking up, kind of groggy. No, they get a clear mindset, do some stretching, wake up, hydrate, refresh, check their goals, and then they make their decisions. All right, so going back into this was a good inverse right here because price took out this, never really displaced from it, tapping back into this inverse fair value gap, and obviously this fair value gap. Um, the thing with this one that was good is there was just one clear fair value gap right here, but price wasn't really that clean, so it just kind of lowers the probability of like me taking this trade. But price closed below it, never closed. Actually, it did close back above, but it never really displaced back above, and it reacted from this fair value gap right here and this order block right here, and then price went lower, closing below this candle wick, making this a order block. So now we have the consequent encroachment, and that's the consequent encroachment. And then price reacts to this. Yes, it technically closes above, which is why you can even see this is technically some sort of model because you sweep this low, but we didn't really sweep any other lows, so it wouldn't be a high probability model. Price is just kind of reacting from this, and sometimes it'll close above when it's not really a kill zone or a macro. It's just kind of trending here. We go lower. Yeah, and this trade was really good in the end. We took out this low. Yeah. So this trade, I remember. Oh, yeah. Okay, so this was yesterday. So I got my, bro, this is my trading account that I got yesterday, and I'm already down $1,400. So yeah, that's fine. But I lost 600 yesterday because I took this trade, and as you can see, there's no real. Oh, I remember. It was on the 5 minute. We inversed this beautifully. The 15-minute inversed this. The 3 minute inversed this, and the 1 minute inversed. I found an entry like one somewhere around here. I can assure you it wasn't that clean. I was kind of looking for a trade, and that's where it comes into. I was reflecting upon it, and I was thinking, what was the motivation to do that, like to take this trade? And I was thinking in my head, I was like, because I wanted to make money. Obviously, like I wanted to have this end result of money. And me coming into trading or to the charts with an attitude that if I take a trade, I will make money, it's setting bad expectations because what happens when you don't make money? You're going to be a lot more emotional. And also, what happens when you put money on the table? Like when you're risking it, you're going to be a lot more emotional. You're going to move your stop, you're going to add, you're going to kind of go around it. Um, so that's why you have to be able to focus on your performance, focus on your process, focus on being the best you can be. Being like bring remember the mind you bring to the moment of the challenge is the one thing that you can control. Okay, so I was longing up to here because this is the what I saw. This inverse right here. I took this, but dude, I always end up somehow losing. I swear. I take these dumb trades. I enter at bad times. So I think I like took a long here, and then I just got obliterated on this long. And then I tried to enter another position like right here. Oh, okay, this is gonna get inverse right here. Like this is a nice inverse. We swept this low, accumulation, manipulation, distribution, tapping back into the OTE of this range. But no, we kind of went lower, and that's expected because at this time we're in between. Right here is it's a macro, so you have to be ready for some big moves. And then when price got down here, I was looking at the 5 minute and I was thinking, okay, this is a clean wick. And I was thinking, price most of the day has been reacting to what's it called? Price has been reacting to rejection blocks today. They haven't been sweeping the highs. So if or highs or lows, doesn't matter which. Price hasn't been sweeping it. It's kind of been sloppy today, in a way. So when price was here on the 5 minute chart, I was like, there's this one 5 minute candle, and I was thinking that we would create a couple rejection around this consequent encroachment of the rejection block, and then we would inverse this fair value gap and then go higher, which obviously we did. But I was not wanting to put money on the table just due to the fact that we didn't sweep this low. We showed lots of displacement down. What's stopping the fact that we just come back up to OTE or something and then reject lower? But the mistake I made is not taking the trade, because price is going to come back up to OTE, or equilibrium of this range. So you can long up to there, but then you don't, you know? But this trade was just so textbook. Like I predicted this before, but I didn't take the trade. Like, I put this on the chart and I put my stop loss right here because these were kind of relatively equal highs inside of a fair value gap. So this was technically 60 ticks, which would be, I mean, 60 points, which would be around 240 ticks, which would be with two contracts, or two contracts, it would be like 2,500, like 1,200. So it would have been a good trade if I took it. But I mean, then right there, you're focusing on the money. You're thinking a trade is your money. Just because you take a trade, you get money. No, it's about following your plan, because once you're able to follow your plan and follow your performance, increase your probability, then the money will come. It's like simple, okay? But I wasn't on the lower time frame charts, but after this happened, I was like, damn, that's a nice one, because we swept this low right here. We closed below, yes, but then we quickly recover. When you see this quick recovery, and then we close above, we tap back in, you get your entry right here, let's say, and then you put your stop loss like right here, because you're putting your stop loss at a wick under. But I mean, like, I'd probably put it like right there, because price could tap back into this volume imbalance before moving any higher. And then price just went higher, and we had this inversion that was good. We had tap back into here. There's technically an inversion here. Price reaches here, takes out this high, never takes out this high, right? We're only reacting from like rejection blocks or fair value gaps. And then we close above this, don't touch this high, goes back below this, touch this low, come back in here. I was expecting price would go long, and it did. Okay, now moving on to today. So this was today. So last night I tried taking a trade during a kill zone. Well, not a kill, yeah, kill zone. From 2 to 5, there's that kill zone. So price was here, and we inversed this fair value gap on a 3 minute time frame. So I longed, it just got destroyed. So then I lost more money. So I was like, okay, I'm not going to risk anymore. Obviously, why would I risk anymore? And then I put on this chart this consequent encroachment rejection block on a 5 minute candle, and look what I saw when I woke up. Price had moved from 684 to 636. This, I mean, dude, no, what? Price has moved like 300 ticks today. So going into the morning session, let's just mark what. So sometimes you can be a little bit blind when you don't really notice the things that truly matter. Like, and you're not focusing on what you've been learning, what you've been back testing, which is your 9:30 to 10 o'clock strategy. So from 9:30, if you're bullish, you're looking to see that protraction, that manipulation move, and then with that manipulation move, you're looking for a 10 a.m. reversal, because the 10 a.m. reversal is the distribution. Sorry, I was kind of just like thinking. I thought I heard my mom come home. Okay, so today I didn't really even think about that. I wasn't really on the charts. The main mistake I made today was trading before FOMC speakers talked, and the reason this happened is because I was looking on the Forex Factory today, and look at this. Okay, right? It says 8 a.m., 9:30 a.m., 10:01 a.m. For me, for some reason, I thought this was New York time, even though this is on Pacific Standard Time. So I thought it was like 9:30, 8, like 9:30, and then 10:01. So I was like, okay, news. This is news. I'm gonna take a trade. So price inverse this. price inversed this. Shit. It inversed it. Oh my god. Yeah. So price inversed this. I entered on the one price came back into the consequent encroachment of this inverse fair value gap, looking for a move lower, but and it never hit. It just reacted from this order block or whatever and just shot up. And I think the issue with this is why are you trying to short here? 10:07. You're in a macro and you're shorting after a 9:30 to 10 o'clock manipulation move, and it's bullish, and that was bearish, and now we're bullish. So this would have been a really good trade if I was just like in the right mindset. So this is what Dodgy actually took. Because look at this trade right here. You know what you have to be thinking to take this trade? You have to be thinking from 9:30. Okay, we're bullish right here. We just took out a high, right? We're looking to displace lower. Okay, we're displacing lower. And now once 10 o'clock comes, you're looking for some sort of reversal up. But remember, it doesn't happen right away. Once that 10 o'clock reversal comes, you kind of get a manipulation and then a distribution. So you get a quick move to one side. So we get that quick move, ensuring that some traders are going to be going long or short. And then we get that reversal up, closing back above. We never tap back into it, but you could have taken your long right here, put your stop loss below this, because we shouldn't really tap back into here. If we're here, I mean, no, you want to see that displacement through this high. And this would have been your trade technically, mechanically speaking, and then you would have put your stop loss to break even, taken out one contract, and then put stop loss to break even, and you would have held this to, I mean, like here. So you could have caught like 100 ticks, but it's not about the ticks. It's about what you would like. What do you have to do to be able to be in the mindset at this moment to take this trade? And that's the question you have to answer. And it's obvious. You have to be mentally prepared. You have to be calm, focused, you have to be aware, mindful. And then this trade, I just pointed out. I just like put this on the chart, played out the reasoning behind it. Although there were these equal highs here that were just like so sexy, but a new price coming up here, and then closing back below. We're gonna go lower before we go higher on this one. So yeah, that's what it did. There's this inverse here that mechanically kind of worked until like it didn't. Like the fuck. So with this one, there was this one, and then there was this one on lower time frame. So if you took this one and you got back in like right here, you'd have been chilling, because you could have been able to get out like these equal highs, because that was the like kind of target. So there's that. I don't know what this is. Oh, I remember I took a trade here. This annoyed me really much, like a lot. I don't know. It's kind of like when you get into that, you're just trading. You're just looking at the charts and you're trying to predict what's happening next, because you have this preconceived notion that if you predict what happens next, you make money. But you're not in a high probability mindset, so you're not going to make money. You're just doing what, like, ask yourself, is this a 90% decision or a 10% decision? Because 90% fail. And if you're losing money, you're just like the 90% of them. So, I mean, right here, we have this. This is after the FOMC, so we have this. I mean, this is FOMC right here. But here we have these up candle right here. And I shorted like right here. But this candle was really, really weird. It went down, and then I was like, okay, I'm in the green, and then it went up. Oh no, I like yeah, I shorted here, but then went all the way up here, and then I was like, okay, no, like I'm gonna get out, because I mean, look at that. That's kind of bullish. You know, we're reacting from this order block. We're already bullish. I'm predicting a top, but like you should have seen, we swept out this high. And overreacting from things. I'm just kind of looking over this right now and just trying to see. And so I just exited with like one tick of profit, and then it just went down. But I mean, it doesn't matter because it never really did anything. And then once it did close below this, it just went right back up and used this as like a triple inverse, double inverse fair value gap. So um, the rest of the day, I was just so uninterested from these like losses I took earlier. But I mean, it just comes down to, I mean, this will always be happening. Like the markets will always be giving these trades, but if you are not in like the mindset to take the trade or be in the highest probability mindset, you're not going to win because everybody else is on the charts in the morning trying to take same trades, doing the same things as you. But you just have to, when you wake up, you have to be better than them all. Like you have to be better than them all, more well prepared. Like you have to use your trading psychology edge. I mean, there's so many things. So going into tomorrow, there's it's kind of hard because I have lifts Tuesday and Thursday in the mornings. But luckily there's news in the morning tomorrow. Let's see. There's news at 5:30 and 9:05 and 10:01. So I mean I'll trade the PM session tomorrow. So actually, will I? Because I have class tomorrow from 9:30 to 11, and then 11 to 12:45. So yeah, from 11 to 12:45, I'll be trading the PM session. So the thing that I'm gonna do to be able to be in the highest probability mindset during that time is I'm going to go to the library, and then when I'm in the library, I'm just gonna like be doing deep work, and within this work, I'll be able to trade when the time is right and be in the right mindset. So yeah, I'm gonna just delete some things and then go on the higher time frame and just look for what my bias will be on a day like tomorrow. So I just gotta delete a bunch of these fucking stupid ass lines. All right. I mean, this is way too many things. All right, so this low right here, price was reacting from this inverse fair value gap that I pointed out perfectly. So if you're like a trader that takes these long-term things, this was a good inverse to take. So now price has set new all-time highs, taking out these all-time highs from before. So I'm going to put this right here, but I'm going to turn down the opacity just because it's not as important. But now this one is, I'm going to need this one to go right here because this is, was, never mind, hold up. This one I meant to do. This is another high that price just took out. Price likes to trend around those highs. So this is all we have in terms of like engineered liquidity. So you have to kind of be a little bit more cautious. In terms of lows, there are not many lows. We do have this low right next to this inside this fair value gap next to these uh, previous highs. So within this, price is probably going to come back down. Um, and yeah, there's obviously these like kind of relatively equal lows, maybe even equal lows, relatively two equal lows. Is that equal lows? That's two perfectly equal lows. So yeah, price is going to be inclined to take these out as their higher probability, but we might just see movements higher. So yeah, see you guys tomorrow. Might do a live recording if there's one tomorrow.